Balance your trading strategy by adding futures. CME Group helps you manage risk and capture opportunities in all market environments. Capitalize on around-the-clock access to highly liquid global futures and options market across all major asset classes. Just visit your online broker and get started. Plug into valuable educational materials and trading tools and see what adding futures can do for you at cmegroup.com/on-the-tape.
Dan here. Welcome to the podcast version of Trading Spaces. Every Monday and Wednesday at 1 p.m. Eastern, Guy Adami and I host a live Q&A on Twitter Spaces. We talk about everything from tech to crypto, rates to commodities, and have some pretty cool guests drop by. So check us out every Monday and Wednesday at Trading Spaces on Twitter and hit follow in the podcast store. So if you miss us live, you can listen to us later. And if you like what you hear, check out our podcast On the Tape that drops every Friday morning with our co-host, Danny Moses.
All right, Guy, let's get into it because, markets, when I look at what's going on today, I see some really bad action, and then I see some kind of stabilizing action. Some of it's within technology, like the bifurcation within tech, which has really been the leaders to the downside. It's interesting because I'm looking at semis, which have been massive outperformers over the last year, right? Acting very weak. I'm seeing software names catching a bounce. I'm seeing some of these SaaS names that have led to the downside catching a bit of a bounce here. Give me your take, and then internet is bouncing pretty nicely here too. What's going on within tech, the way you're kind of perceiving this? And we know tomorrow tech earnings get kicked off with Netflix.
That's a really hard one to sort of unravel because it's not just a valuation game. Because if it was just a valuation game, Salesforce wouldn't be doing that well today because Salesforce is still rather expensive stock. But then on the flip side, you look at a name like Salesforce and this recent move down to what I think 225 or so over the last couple of days. I mean, it's decent support level. I mean, we've traded down to levels that we last saw in the spring of 2021. So I think for some names, this is just my opinion, I think for some names it's valuation, but for other names, I think it's technicals. Like these stocks in the short term, at least, have exhausted themselves to the downside. So that's what today is signifying to me, because there's really, if you're trying to figure it out and put a bow on it, there's no way to sort of wrap a bow on it. Each stock has a different story.
No doubt. Here's Gavin Baker, Atreides Management. He is a star tech stock picker and fund manager. He put out a tweet thread earlier today, and I think this is interesting.
Can I ask you a question? I know you hate when I do this.
Yeah.
So I know, and I'm sure a lot of people are embarrassed to ask questions that I typically will ask.
Not related to Dusty.
Is a tweet storm the same as a tweet thread, or are they two different things?
Yeah, I guess, a thread is a thread. A thread is just a bunch of tweets put together. A tweet storm sometimes signifies kind of the intent or the intensity of the thread. You know what I'm saying? So
a thread has logical progression, but a storm could just be like typical storms where there's no, it's just haphazard. Like there's just chaos.
Like this question, basically. Yeah.
Exactly.
All right. So here's Gavin's tweet thread. Number one, an important signal to me that a correction may be nearing its end is when the stocks/groups that had been the epicenter of the weakness start to show some relative strength /stabilization versus indices along with differentiation within them. So then he gets into some different groups. And I think that's kind of interesting. Maybe Amanda can find that and post that in the notes or however they do that. But, Gavin, I think that he's been very open, if you look at his Twitter over the last few months, about some high valuation kind of names that, maybe they're deemed innovative and maybe they find themselves in certain portfolios. He fully expected to see some sort of a correction, but this is maybe getting a little long in the tooth. And maybe that's kind of what we're talking about a little bit here today, guys.
In individual names, I would absolutely concur. Without question, there are names that are down anywhere from probably 40 to 75%. And we've talked about them at length, numerous times on this and on other platforms that we speak on. With that said, the S&P 500, I mean, are we at the beginning of something, or is this enough of a sell-off? Personally, I don't think it's nearly enough of a sell-off. And I just want to add one more thing to this equation, because why not? We have a half hour. The IWM, which we've talked about forever as well, below that 210 level. And the last time we got down here was December 20th or so, and we bounced off of it. Well, here we are, like what, 207, 208 or so in the IWM. I think it's a pretty important technical level. That support, which has been in place since the spring of last year, is being tested. I think you absolutely have to look at that. And what, just for shits and giggles, I'll throw the XRT in as well, which is a pretty critical support level.
So the Russell 2000, the IWM, the ETF that tracks it, interestingly, the 52-week low guy was basically 205 on January 29th of 2021. Okay, so here we are. Today's low was 204.84. Oh no, the low prior. Yeah, so okay, this is interesting. I mean, nearly identical, like match lows today. Like, look at that. So that's a big one there. But what was your take, Guy, on just sorry, I lost my train of thought for a second. All right. So within tech though, Microsoft, that deal yesterday, $70 billion in cash. The stock is trading higher right now than when that announcement came out yesterday morning. What is your take on that? That a company, a $2.5 trillion market cap company, can buy a company for $70 billion in cash and be unchanged?
All right, now I'm going to say something, and you're probably not going to like this either. I would submit that Microsoft yesterday could have said they put $70 billion on red at Las Vegas Sands and lost, and it would have been the same outcome.
Nice.
And why is that? Because you're talking about a company with a $2.3 trillion market cap. $70 billion is a bit of a rounding error. And as we have mentioned numerous times on Fast Money, the sort of the 302 to 305 level made perfect sense for it to find support, because that, if you go back and look, was a prior all-time high back in September of last year. So the timing coincided with the support level. I'm not suggesting that was why they did it. It just lined up that way. But $70 billion for them, I mean, this is, again, it's a rounding error to a certain extent, and they could have said they bought me for $70 billion.
Well, listen. Here's the deal: when the company was, less than $1 trillion, they made a $26 billion acquisition of LinkedIn. A lot of people tell you that
Brilliant,
at first,
by the way.
well, maybe not. I mean, it's one of the worst products on the planet that is connected to the internet. Let's be frank. That's one. But then, they made a lot of bad deals prior to Satya Nadella. So yeah, maybe this one's fine. I mean, the history of big M&A and big tech is not particularly great, and we could just go back 25 years.
Well, wait a second. So
thinking about
what
some of
about?
that.
I remember this one like it was yesterday because I had never heard of it, and it's funny because one of my friends who lives in now Singapore has tried to reach me on this, and he finally acquiesced and he called on my landline. But remember when that whole WhatsApp deal came? It was like a $16 billion deal or some crazy number, and it broke
Bigger.
during our show. And I literally had never heard of it. And I was just praying that Melissa didn't come to me. And I think she went to you. And fortunately, you knew everything about it.
Well, I mean, it was one of the fastest growing messaging apps at the time. I think it was back in 2000 in 13. It was 2013, and at the time, I mean, the idea of platforms like that had like billion user bases or whatever, I mean, was just kind of astounding. Here, let me look. It was $19 billion deal.
$19 billion. And I was
19.
like, what? I'm like, this is a joke, right? And I mentioned it because my friend Jim, who now again lives
Everyone
in
and their
Singapore.
mother uses it, but they didn't even have a revenue model back then. They had like a handful of employees. February 2014, $19 billion.
Anyway, he said he's been trying to reach me on WhatsApp. I'm like, how would I know? Does it ring or something?
Maybe it's attached to your phone number. We had Alexis Ohanian on a brand new podcast that Risk Reversal Media launched. I'm one of the co-hosts. It's called OK Computer. Follow that in your podcast stores. But Alexis Ohanian was the founder of Reddit. And he's a bit of a genius, this guy, man. He's I think he's mid to late 30s, and he started a venture firm, and he's gone all in on Web3 sort of stuff. But we were talking about like the start of Reddit, and it's just amazing when you think about it. I mean, he started this in his dorm room at UVA, Guy, in 2005 with $12,000, him and his roommate, that they got from Y Combinator. They're in the first class of Y Combinator. And never in his wildest dreams did he think that he'd create a platform that would last as long as it did, 15 years and counting, and then have over like 100 million active users, which is pretty astounding that people can just create that stuff from their dorm room.
the creator economy. But hasn't there been a creator economy all through history? We just now choose to label it.
Yeah,
that.
but you're kind of mixing metaphors in a
Well,
way.
whatever.
Yeah. All right. Let's move on to
But
bank
I just like
stocks.
saying it. I mean,
No, I
creator
know.
economy sounds like it's actually pretty cool.
So Guy, let me ask you this, okay? J.P. Morgan is down 3 days in a row. On Friday, after it reported its earnings, it was trading Thursday's close. Okay, you ready for this? On January 13th, the stock had traded as high as almost $170. Its all-time high that it made in October, okay, was $173. So it was, when, as you would say, a whisper within its all-time high. It looked like it was going to break out. It was kind of this ascending, like, channel-ish sort of thing. Stock gap down 6% on Friday after earnings, was down another 4% yesterday, and it's down again nearly 1%. I mean, what the heck is going on with JP Morgan?
I think I've said this before, so I'm not trying to backpedal at all. But for the longest time, J.P. Morgan was being rewarded a valuation that other banks were not. And to me, it came in the form of price to tangible book. And in the heydays prior to the financial crisis of 08 and 09, some of these banks were trading close to 3 times tangible book, which that's fine. It's great. What I've said all along is, I think we're in a different world right now. And although JP Morgan deserves a premium valuation, did it deserve something close to 2.7 times tangible book? And they reported on January 14th. And off memory, Nathan, tangible book was $71.53. And you can do the math. So we're still at these levels north of. So even if you were to say it deserves a premium valuation, I think what the market is struggling with, what is the right multiple? And, if you say it's 1.8, you can make a compelling case that JP Morgan has room all the way down to about 125 or so. And I don't think that's out of the realm of possibility, because if you look at a prior high, Nathan, you go back to January of last year and it all sort of lines up.
Yeah, the breakout, though, I would say, from the pre-pandemic.
By the way, that was a pretty cogent answer by me.
It was a great answer. I would the next stop is that kind of low in that the summer low in the mid 140s, and then you have that kind of breakout level when it got back to the highs prior to the pandemic in early 2020. That's just above 140. Well, let me get your quick take on Homebuilders, because the segue here is that you'd think that money center banks would have liked this rise in interest rates, right? But it really is the cost that really got people kind of out of sorts, especially as it relates to JP and Goldman, and then just the expectation for a slowdown in capital markets activity and some other stuff. But they don't like it. Stocks and they look kind of sick. That's one thing. All right. So then on rates, Guy, the move in home builders over the last week has been pretty dramatic too. And what is it, just rates, or is it the potential for a slowdown in some of the dynamics that were driving the housing market over the last, let's say, year and a half or so?
I think it's a bit of a witch's brew. I think rates clearly are not helping. Lumber prices, which we saw went into basically went into ascension at points last year, gave the entire move back. They've been on the rise as well. Raw material costs continue to go higher. And by the way, you mentioned home builders like the Pulte's and the DHIs. I know you're going to ask the next question is, look at the move in Home Depot recently, and you'd be spot on to point that out, because we topped out, I believe, at a $420 or so. Here we are at $360. The armchair technicians out there, that I am one of them, not nearly in the league of like Colleen who's listening, but you have a very short, little short double top around that 420 level. The next logical level of support, in my opinion, for Home Depot goes all the way back to the prior all-time high from May of last year, $340 or so. And at 363, we're not that far away. And I think that would make sense. So, a lot of things that have been supportive, momentum being one of the biggest things, is now out of these names. You have to look for reentry points. And I think that's where we're on the verge.
Well, I'll tell you one thing. If you look at the XHB, Guy, and maybe Amanda will post this. I mean, the break of that uptrend from its 2020 lows, you just draw a line and you connect it to the low from kind of mid last year, which was just above 70, and you're below that right now. And so you could see 72 in this thing in not so distant future here. So I think it's interesting to keep an eye home builders and a lot of these sectors that are related to rates. Oh, this is the thing when I lost my train of thought earlier, Guy. So you saw that the 10-year was
Did you
trading
find
near.
it?
Yeah, I did. Was trading near 1.9% this morning, and then it's come in a little bit. And so I guess my point is that the thing that kind of kept stocks kind of buoyed here, or at least tech stocks a little
I mean,
bit?
you're right. The 184. I think if we're looking at it now, I mean, I think everything's on a hair trigger in terms of what rates are going to do. So I think that's what's going on. I think the market's trying to find its level of support. We had a huge sell-off yesterday. By the way, I'm not, and I think you would agree with this. I mean, there's a lot of day left, clearly, but a 17-point bounce or so in the S&P 500. And oh, by the way, at one point today, it did go negative around 11 a.m. Is not all that impressive. Now, again, a lot can happen in the next couple hours, and we've seen rip-roaring rallies in the last couple hours of the day, so might happen again. But the Russell is still negative. And I don't think there's a lot to glean from today's action. You have a Biden presser, I think, at the end of the day today that fast money might be usurped by, another great word. So there's still a lot of things out there for level for cause for concern. So I don't know right now. Just looking at a Nasdaq that's up 0.5%, an S&P that's up 0.4%. Nothing really is all that earth shattering to me.
Well, hopefully not eye shattering.
Yeah, no, I don't know why I was saying. You know why? Because I just put my glasses on to see better.
All right, question for you. Crude oil,
I have readers.
new highs, broke out. Can it sustain it? And what do you think? I'm kind of getting ready to pull the trigger on the XLE to the short side.
Oh, yeah, you are.
Taking the
Yeah, you are.
opposite side of this because, and I do it through put spreads. I actually detailed the trade idea on my in the money segment that'll drop, that I do with Fidelity each week. That'll be on my Twitter later this afternoon, probably right after the close on the XLE. I think you're probably going to move back, in the XLE guide to, I don't know, I want to say kind of high 50s or something like that. It just feels like it's gone too far, too fast in a way. But crude, it's come from basically mid 60s to high 80s in less than 2 months. Can it make a meaningful breakout here? Can it establish a new range above the prior high, above 85?
Yes is my answer, and I would understand why people would say, as you're doing now, this is a logical place to take money off the table, and as they say in the business, sell the double. Totally makes sense. You mentioned the XLE. I mean, this level is where the XLE topped out at back in December of 2019 before it, like many other things, cratered to the downside. So it's a logical place for the XLE to stop. By the way, it's a logical place for the OIH to stop because we have failed at this level, this 225 or so level, numerous times. What I would say is, yes, I get it. And yes, that's a disciplined thing to do. I still think crude's going higher. I think we're going to have triple digit oil. I thought we'd have that by the end of 21. That did not happen. And oh, by the way, you saw a huge downdraft right around Thanksgiving on the back of Omicron and the subsequent SPR release when crude, I think, lost almost 30% in pretty much a straight line. Well, it's clearly gotten all that back. I'll stand by this and say I think crude goes higher. But again, if you're disciplined and if you've been long, this is a great area to take money off the table, both the OIH and the XLE.
The OIH, you had a great call. When it was down there at 185, you thought it'd get back to those highs from October. It's done that. It actually made a new high. You draw a little line from that high in March. You did have that kind of false breakout in June, and it went from 245 all the way down to 165, right? That's the range. I mean, this is what you want to trade here, I guess, right? So, I mean, playing for a breakout at this point doesn't make, to me, a whole heck of a lot of sense. Let's put that one out there. All right, kind of related, but not really. Let's look at Ford. You see this, that they had to shut down one of their plants in Michigan because of chip shortages. The stock's down 7%. It's had a huge rally. GM's down 2.5% here. Those were not easy trades last year. They maybe looked easy because but they were volatile last year, right? It wasn't an easy one in GM and Ford. What's your take here? Because Ford got going right out of the gate, but does this kind of change the narrative as far as like their ability to execute in a tight like chip shortage environment at a time when they keep doubling up on their aspirations as it relates to EVs?
I don't Well, clearly, when the stock is down like it's down today, it took the market off guard. So I don't want to be glib in saying that this news was in the stock because it wasn't. But I don't think this should be a big surprise to people. I mean, chip shortages is something we've been talking about literally for the last year or so. So, stock down 7.5%, you could make the argument that it wasn't in the stock. This is, if you're asking me, what you are, I think this gave people a perfect opportunity to, again, take profits in a name that a lot of people have had a huge run in. I still think there's a lot of upside in Ford. Again, it's a valuation thing to me. They're probably going to earn $2.25 or so. I don't think a 15 multiple is the right multiple, but something close, and you can do the math. But I've been steadfast in that. And you said there are no easy trades. You're right most of the time. I will tell you, when the Boston Bruins traded Ken Hodge for Rick Middleton, that was the easiest trade of all time. Maybe the worst trade in the history of professional sports, clearly the worst trade in the history of the New York Rangers, but that was an easy trade for the Bruins, at least. Back to you.
Fair enough.
By the way, you like the way I can bring sports into here? It's pretty amazing.
It really is. It's truly amazing. Here's another one for you, Guy. Today, also on my In the Money, and I'm not giving too much away, so you have to tune in and check it out. I had a contrarian way to play for a bounce in the XBI, the ETF that tracks the biotech sector within the S&P 500. Look at this thing. It broke 118, okay, late November, and then it tried to bang around. It tried to hold out below those lows. It was just, that had been support back in August, back in May, and it just was in a free fall. It's still in a free fall, trading at 95.5. This one is one where I feel like it wouldn't take a whole heck of a lot. Maybe some M&A in the space, Guy. I don't know. I don't know anything. I'm just a big dummy. But that thing could be back at 115, 118 in like 1 week or something like that. What is your
an all-time high, I believe, of 175 or so in February of last year, had been basically awful the entire year, which I think surprises a lot of people. Clearly surprised me. This level, though, that you've gone this counter trade, the contrarian in you to get long here, this lines up with an all-time high, a prior all-time high, way back in the summer of 2018, if you really want to go back in time. Where we're stopping here makes perfect sense. So I'm with you on this one, Dan. I think this is a great entry point. I think the risk reward sets up really well. I say bully for you. By the way, it was also the level that we broke down from, like everything else, in February of 2020. So well done. I didn't see this, but now that you're putting it on my radar screen, going to take a look.
Maybe it's your final trade on the fast money tonight.
I'm reticent typically to use ETFs for final trades, but in this case, maybe. But listen, there might not be a final trade on fast money tonight because, as I mentioned earlier, the president is giving, I don't know what, it's a press conference or something. So he might, as they say, bleed into fast money. Back to you.
Fair enough. One last one on biotech before we go. And Amanda just put forward a question from somebody that might be an interesting one to kind of hit. But what Moderna? This thing.
Come on! If you watch Fast Money, peeps, how many? Dan, are you just?
You said 180. I know you were saying 180. Okay. Well, here we are.
Well, here we are. Here we are, peeps.
So what is your take here? I mean, it really feels like 150, Guy. It feels like the kind of lows in May at this point. I don't know why you'd step in front of this right here. There's no bid for this thing. I mean, I don't understand it. So explain it to me a little bit what the bull case would be right here.
Listen, this for a fact. I would say for the early part of last year, I said, listen, Moderna's a real story.
Yeah.
And I actually said, I think this could be a half a $500 billion company at some point. And listen, when it was trading, I think it got up to 450 or so. Excuse me, it got up to almost 500 in the fall. Certainly looked like we were going to get there. Then the news flow started to change. Other vaccines came into play. Maybe Moderna wasn't as alone in some of the work that they've done. In other words, they didn't have the monopoly on some of these RNA vaccines and stuff. And the market sort of took them to the woodshed. Why do I think this is a logical place? Because this was a prior all-time high, again, back in February of last year. It traded up to 180 or so and then failed and then got back on its horse. So that's why I've been saying 180 for a while. here we are. But to your point, we haven't seen a volume day that would suggest capitulation by any stretch of the imagination. So why get in the way? I do think this is an okay place to get in, but I totally understand what you're saying.
Hey, so just so you know, I mean, this company, and you got to give them credit, they raised so much capital, right? When they could. They have like nearly $9 billion in cash on their balance sheet. They have no real debt. They have less than 600 million. And so they have an enterprise value of like $63 billion. And, it trades cheap, I mean, so I don't know. This is one of those ones that's really hard because we've been in this bull market for so long, right? And when you think back to 2020 and the throes of that kind of, that meltdown, no one knew what the hell was going to happen. It was really hard to kind of step in, I think, in a lot of different things. But here we are now where, I mean, I think the worst case for the stock market is that we're down, let's say the S&P or the NASDAQ, 20% from the highs at some point this year. It would take some sort of event outside our purview, I think, to do more than that. I don't know if you agree or disagree with that. So some of these stories, there's valuation support, there's balance sheet support, there's fundamental support as far as their business plan, stuff like that. I have to think very soon Moderna falls into that category.
Without question. Now, I know you really hate when I do these things, but I'll do it anyway. We just did something with the great Carter Braxton Worth that we call market call charts earlier. And you were talking about things being squeezy and stuff, and you asked me to bring it in. You said, see if you can weave that into the narrative. And of course, I used George Jefferson, called his wife Wheezy. But then I said that the band Squeeze with Paul Carrick. And then you just talked about how long can this continue, which reminds me of song How Long by the band Ace, who Paul Carrick was also in. Great song, by the way. A lot of people thought he wrote that about a girlfriend. In retrospect, he wrote it about his bass player that was sort of moonlighting with another band. That's just dropping knowledge shit left and right here, Dan.
Yeah, I mean, useless knowledge, but it's knowledge. And
you
I
say
mean,
it's
like,
useless. I mean, I think
you say goodbye.
No,
And
please.
no, you're
I'm
not a
begging.
Beatles
I'm
guy.
begging you to
All right,
stop.
hold on. Let's see who wants to get in here. I think we have a few more minutes. You're on a roll here, Guy. Amanda just sent somebody. Amanda, why don't you bring somebody in here who's got a question? I like
Whoever it
that
is,
question.
I'm just telling he or she now, don't suck. Okay, go ahead.
Oh no. This is a crypto punk guy, and Domingos seems to like the ETH. What's up, man? How are you?
What's going on, guys? How are you?
Good. Thanks for dropping into our trading spaces.
Well, what do you guys want to talk? You guys want to talk crypto or multifamily construction starts?
Let's talk about your PFP. Explain to Guy what's going on with your avatar here on the Twitter, because he loves learning new things here.
Oh, that one's a derivative of the crypto punks and the nouns. It's called noun.
It's a noun punk.
Yeah, there you go.
Yeah.
Yeah, those are my favorite ones, by the way. I'm glad you utilized it in your avatar. I can't even believe I just said that, but please continue.
All right, well, let's talk about multifamily since we just covered crypto. So multifamily dominated new housing starts this morning. And at least what I'm seeing is a rise in adult cohabitation, so platonic cohabitation. What do you guys think about that from the perspective of not only cohabitation, but a decrease?
Well, I've been platonically cohabitating for 22 years in March. And I would tell you that it's one way to go. I mean, right, Guy? I mean,
listen, this is
kidding. My wife doesn't listen, so I'm good here. No, that's interesting. Are you saying like it's just like people broing down? Like they're like, "What's up, bro? Let's live together. Let's kind of share some expenses." Is that what you say it's going? It's kind of like Three's Company. Guy, you remember Three's Company? That was a brilliant show.
By the way, everybody loved Suzanne Summers. Joyce DeWitt was obviously the sleeper in that category, but it was Don Knotts he was one of the original, I think, like landlords. Anyway,
Mr. Roper was genius. I mean, that show was amazing. You know what? I'll be frank. I'd rather talk crypto and noun pumps. I don't have much to add there. What do you think's going on with crypto? Let's ask you. You have the we have Bitcoin down 40% or so, ETH down a little less than that. A lot of altcoins are down more than that. There's this little battle being played out here. What's your take? I'm just curious, near term, how are you positioning? What do you think of it here?
Well, so price is driven by liquidity. And so when you think about the crypto market and how we have so much leverage in those markets and how the leverage is rather opaque, you end up having instances where you have hyperliquidity, and that's generally correlated with times when that asset class rises, and then you have times when liquidity vanishes, and that's correlated with when we have big price dips. Until we have more transparency, not only into leverage, but just transaction positioning like we do have in the equity markets, I think price discovery is going to be a really hard thing to pin down, and you'll continue to have a lot of volatility.
Yeah, no, I agree. It'll be interesting to see because last spring, from the highs in April to the lows in the summer, it felt really bad. I mean, that was clearly like, for crypto terms, it wasn't exactly a protracted bear market, not 18, 19 into 20 sort of stuff. But I wonder if one of those are coming where, we go down and we kind of stay down and bang around in a lower range. And it'll be interesting to see. We had Alexis Ohanian, I mentioned that earlier on OK Computer. So check that out. It dropped this morning. He and I were talking about this idea that a lot of people have moved very liquid ETH or Bitcoin into very unliquid or non-liquid, I guess you'd call it, NFTs, and maybe that's where some of the leverage is also, kind of that transference, and that could be something where maybe people sell what they can, not what they want to. So who knows? Well, listen, we appreciate that. That's really good color and commentary. I know the way Guy talks about the Rangers and trades from like 30 years ago, he just
Well,
got
no,
that way
that
about
was
that
that was a
conversation.
devastating trade. I don't think you fully understand
I
Rick
get it.
Middleton.
I
No,
get it.
Rick Middleton, the rain. Phil Esposito wanted his old line mate back in the form of Ken Hodge. So the Rangers acquiesced and they traded for him. And they gave away one of the young studs in the game in the form of Rick Middleton. It was an awful trade, and it haunts me to this day. By the way, before you wrap, I just want to mention that my man Cassius Cuvée is on as well, listening. If you don't follow him, you're doing Twitter wrong. Back to you, Dan.
All right, man. Well, listen, thank you, Domingo, for checking us out. Thank you for everyone who was on this. Also, we know that a lot of people listen to these after the fact, so we really appreciate that. You can listen to them on Twitter Spaces, and Amanda Diaz also puts them in our Trading Spaces podcast feed. So check it out there if you want to take it with you on the road. And we appreciate you guys, and we'll see you on Monday for Trading Spaces. And check out our podcast, On the Tape podcast, that drops on Friday. We're gonna have a very special guest. Her name is Melissa Lee. She's the host of CNBC's Fast Money. She's a very good friend of Guy and myself, and we're going to talk to her about the 15-year anniversary of Fast Money, of which Guy Adami is the only original member who started on the very first day 15 years ago. Shout out to Guy. You're the man, buddy. OG.
Holler. It's like that song, Holler Back Girl, right? Isn't that like
Holler, really. I honestly, I've never in my life thought I'd hear you say something like that, but I appreciate
You
you.
never
All
know.
right, buddy.
I'm keeping it real. I'm keeping it real.
All right, pal. See ya, everybody. Thanks.
Thanks for listening to this episode of Trading Spaces, brought to you by CME Group. If you like what you heard, follow us on Twitter @Trading Spaces and join us live every Monday and Wednesday at 1 p.m. Eastern.